What we hear from these companies, Andrew, is that there's just so much demand. Rising tide lifts all boats. Companies are spending more, and they're needing to spend more on cybersecurity. What are the nuances that you're going to be looking for in the report? Because as we found out in the last couple months, it's not a one-way ticket higher for these stocks like Palo Alto.
Yeah, thanks for having me, Sarah. So yes, the cybersecurity space has been under pressure year to date. I think there's only a couple stocks, CrowdStrike being one of them, has been a big outperformer relative to the NASDAQ. But Palo Alto has had some issues. They've missed billings expectations for 3 consecutive quarters now. I would say the stock is it is recovering. It dropped about 28% after the last earnings call last quarter, but got a lot of it back so far. You know, things we're looking for tonight, I would say, our number one, billings. They've got a 3% guide for billings growth this quarter, coming off a 26% comp. That's the same comp they had last quarter when they grew 16%. So we think they can do about a 5% billings growth tonight, 20 million above the high end of guidance. Roll that into the guide for next quarter in the July quarter, puts you at about 10% growth in billings. That's still not where we'd like to see it. We'd love to see this getting back to the high teens, maybe 20% next year at this time. But they've got a number of positive things that have happened this quarter that I think gets them upside on the quarter in billings. Number one, you've got the Thunderdome deal that they said they've pulled out of guidance. They're rolling that's starting to roll out to 60 locations now. Second, they had a really strong quarter with the Fed, we think. They had a big Department of Energy deal that adds to upside. Third, you'd have the big United Healthcare Group cyber attack that's probably the worst cyber attack we've seen in U.S. history. We know that they helped clean up that breach, and we think they got a big deal out of that following that breach. And then lastly, they took their guidance down ultimately because of these go-to-market changes that they're making, pitching their platform play. We've actually talked to about 15 out of 33 different resellers we talked to, said they had positive reaction to those new promotions that Palo Alto put in place. It's having a positive impact, not a negative impact. So really, we think they can put up a nice quarter here, roll that through to next quarter on the guide, and get growth back to that, call it high teens, 20% growth rate next year.
So it sounds like you're thinking the execution story might have been contained. None of your survey work really hints at a secular shift in demand to the downside. Is that fair?
It's certainly not a secular shift. I mean, the stocks haven't performed well. That would suggest it's a secular, like a slowdown in spending. But the hackers don't care if the economy is high, if is bad, and the inflation goes up. They just continue attacking. And we've seen hackers using more AI than the defenders are using. They're using it for deep fake purposes. They can write malware with it. So they're doing a really good job leveraging AI, whereas the defenders are just starting to integrate it. So I think you're going to see a continued improvement in spending throughout the year in the cybersecurity space. The best ways to play this one are definitely CrowdStrike and Palo Alto.